But let's focus in then on Justdial and talk a little bit more about the numbers with the management. We've got Ram Kumar Krishna Char who joins in on the show to give us more details. Thanks very much for being with us. Now, to start off with, it's been a steady sequential growth and investment into the sales efforts, and that is certainly giving you a lot of leverage this time around. Give us some idea as to how the paid listings and the evergreen contracts stack up.
Yeah, overall it has been a great quarter for us all around on the top line. As we mentioned earlier, the initiatives that we took in the earlier quarters, that is Q3 and before, has started paying off, especially investment in feet on street is one of them, and second is the pricing action that we took. And then overall, which the overall run rate of revenue for Q4 has been extremely good, so which actually got reflected in the deferred revenue component, that stood at 162 crore. So our belief is that with the continuing drive towards expanding our footprints across geographies, expanding the sales force, that is going to continue, and that we believe will continue to deliver incremental growth as we move forward, and that is going to drive the growth, I would say, as we move forward. So we have seen healthy sign up of campaigns as well, and obviously the marketing efforts are paying off, and as we mentioned, this is about educating the SMEs, meeting them, and explaining to them the benefits of listing on our platform. So it takes time, but then the sales effort and the initiative that we took on the sales front is beginning to pay off, and in the coming several quarters this trend should continue. And on the overall listing, it has been an effort. You would have seen that the overall listings has also grown by about 30%. That's a very conscious effort by us. We did a large combing operation, and that continues to happen. So we are adding about 400,000 average new listings per month, I would say. That trend should also continue as we move forward. So overall, this has been a great quarter for us, and which gives us the conviction and the belief that the coming year will see all the metrics showing better growth rate than what we did in 2013-14.
Mr. Krishnamachari, let's focus on the margin picture as well, and the EBITDA margins, after dropping over 650 basis points in the second quarter, have shown an improvement in the third quarter, and the fourth quarter then is also seasonally strong, and operating metrics are also improving. So given your monetization plans of Search Plus, which is going to be a key trigger for margins, what's the expansion that you're aiming at for the next 3 to 4 quarters?
Right. Definitely, as we mentioned earlier, the operating leverage inherent in the business model gets reflected as we expand and grow in scale, and as we move into the 14-15 also, we believe the operating leverage will continue to play. Now, having said that, we have quite aggressive growth plans as far as from a sales and marketing efforts are concerned. I mentioned earlier also that we'll be investing in technology and technology infrastructure as well. So part of the margin should flow back into these growth initiatives. Our belief is that despite these flowing back and despite these initiatives, margins can continue to grow given the operating leverage. On a normalized basis, we mentioned earlier that there will be some one-time ad spend that we plan to do. The exact, I mentioned the range. So in the coming few months, we'll be able to figure out exactly what is that quantum that we are likely to spend.
And finally, are you confident of a similar top line and bottom line growth performance in FY15 post the elections? Do you think that we can see an even better run rate?
We have strong conviction and belief that the current year 14-15 growth rates on all front will perhaps be equal or better than what we achieved in 13-14 on all fronts. Of course, as I mentioned earlier, the bottom line is subject to the one-time ad spend that we may likely to do. But if you normalize for that, on all metrics, 14-15 growth rate should be better.
All right, Mr. Krishnamachari, thanks so very much, of course, for joining in and taking us through your numbers, and all the very best for the future quarters as well. And the key takeaway really is that the margin growth will continue to be on a rather healthy footing, and we'll also see good addition as far as paid campaigns are concerned. Remember, Barclays also came out with a report on the counter today, and they continue to remain overweight on the stock. But away from